Imagine it's a Tuesday morning in a quiet suburb of Ohio. People are lining up at the Starbucks drive-thru, scrolling through their phones, unaware that behind the digital interface of their banking apps, a silent hemorrhage is taking place. This isn't 1929. There are no frantic crowds banging on locked brass doors. This is the 2026 invisible bank run. In the digital age, billions of dollars can vanish from a bank's ledger in the time it takes you to send a text message. Since the start of this year, we've seen a pattern that mirrors the terrifying lead-up to the 2008 collapse, but with a deadly modern twist: speed. The American public has been told that the system is resilient and well-capitalized. But if you look at the surging numbers of unrealized losses on the balance sheets of regional banks across the country, the facade begins to crack. We are currently sitting on a powder keg of devalued government bonds and toxic commercial real estate loans that makes the 2008 subprime mortgage crisis look like a minor accounting error. The question isn't whether the system is failing. It's whether your personal savings are being used as the ultimate sacrificial lamb to keep a dying structure afloat for just one more day. For the average American family, the bank is no longer a vault. It has become a black hole. To understand the danger of 2026, we have to look back at the scars of 2008. Today, the villain is much more sophisticated. We are facing a liquidity contagion fueled by high interest rates and a drying global dollar supply. In 2008, the government stepped in with massive bailouts, essentially printing their way out of a hole. But in 2026, that printing press is running out of ink. Inflation has stripped the Federal Reserve of its favorite weapon. They can no longer save the banks without completely destroying the value of the dollar in your pocket. The trap is no longer about home loans. It's about the very survival of the American currency itself. While the world was distracted, a massive, silent disaster was brewing in the hearts of America's great cities. From the skyscrapers of Manhattan to the office parks of San Francisco, the commercial real estate time bomb is ticking. In the wake of the remote work revolution, these billion-dollar glass towers have become zombie assets. They are half empty, their values are plummeting, and they are the collateral for trillions of dollars in loans held by your local and regional banks. This is where the 2026 crisis becomes personal. Unlike the big, too big to fail banks, regional banks are the lifeblood of the American middle class. They fund the small businesses, the local farms, and the home construction in your town. But right now, these banks are suffocating. When these commercial loans come due and property owners walk away, the banks are left holding worthless concrete. The credit crunch is here, and it's starving the American economy from the inside out. In the dark corners of financial history, crises have often been used as accelerants for radical change. As the traditional banking system trembles, a new player is waiting: the central bank digital currency, or CBDC. For the US government and the Federal Reserve, a massive banking meltdown provides the perfect problem-reaction solution scenario. If the public loses faith in private banks, the government can step in as the savior, offering a Fed account that is safe and direct. But this is the ultimate trap. A CBDC isn't just digital money. It's a programmable surveillance tool. We are being pushed toward a future where your money is no longer yours. It's a privilege granted by the state, subject to their terms and conditions. Most Americans believe that the money in their bank account is their property. But legally, in the United States, that's a dangerous misconception. The moment you deposit your paycheck, you technically become an unsecured creditor to the bank. And in 2026, a terrifying legal mechanism is being dusted off: the bail-in. Unlike the 2008 bailouts, a bail-in allows a failing bank to simply cancel its debts to you. Imagine waking up to find that a chunk of your savings has been converted into worthless bank stock to keep the institution from collapsing. The system is designed to protect the systemically important institutions, not the individual. While the internal plumbing of the US banking system is bursting, an even larger storm is gathering. For decades, the US dollar's status was anchored by the petrodollar system. But in 2026, that anchor has been cut loose. The rise of the BRICS nations and the shift toward de-dollarization means that trillions of dollars held overseas are starting to come home. This is the reflux effect. As these dollars flood back into the US economy, they create a tidal wave of inflation that the banking system cannot handle. We are seeing a death spiral where the dollar loses value, forcing the Fed to keep interest rates high, which in turn causes more banks to fail. For the US audience, this means the banking meltdown isn't just a glitch on Wall Street, it's a symptom of a declining empire. We are witnessing the great cannibalization of the American financial landscape. While small regional banks are being allowed to wither and die, the big six megabanks are growing into unstoppable monsters. In every crisis, there is a transfer of power, and in 2026, that power is flowing directly into the hands of JP Morgan, Bank of America, and Goldman Sachs. The terrifying reality is that competition is being erased. When only a handful of banks control the entire nation's wealth, they become more powerful than the government itself. They decide who gets to participate in the economy and who gets debanked for having the wrong opinions. The storm is no longer on the horizon. It is here. The US banking meltdown of 2026 is the final wake-up call for a nation that has slept under the blanket of artificial prosperity for too long. We have mistaken currency for wealth and debt for growth. But as the ledgers are wiped clean, we are forced to confront a fundamental truth. Real value cannot be printed. So, is your money safe? The answer is only if it exists outside of their failing game. History tells us that in times of systemic collapse, the only things that survive are hard assets and local resilience. We are seeing a return to the basics: gold, silver, land, and self-sovereignty. The 2008 collapse was a warning shot. The 2026 meltdown is the impact. But remember, the end of a corrupt system is not the end of the world. The American spirit wasn't built on credit scores. It was built on independence. The trap is closing, but for those who can see it, there is still time to move. Stop asking if the system will save you. The system is busy saving itself. It's time for you to do the same.